bigger's not better in venture. It turns out bigger is worse in venture.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have David Honik with us. David is a founding partner at Lobby Capital, where they are backing entrepreneurs who have the audacity and courage to challenge and disrupt the technological landscape. In this episode, we talk about the rebirth of August Capital as Lobby Capital, David's perspective on AUMs, why venture capital is the best job in the world, David's regret of passing on Uber and LinkedIn, the people aspect of VC, David's biggest learning investing in startups for over 23 years, and lots more. So without wasting any time, let's dive straight in. Hey David, so good to have you on the VC 10X podcast. How are you doing?
Great. Thanks for having me.
Yeah, it's a pleasure having you on. To start things off, can we first have your story and how you started investing?
Oh my God. Do you want the 2-minute or the 40-minute version?
Let's do the 2 or 3 minute version now. Yeah.
Yeah. I mean, so my undergraduate degree is in computer music, which was amazingly fun, but not particularly useful. I then got a master's degree in criminology. I then went to law school. I thought I was going to be a criminal defense attorney. I didn't do that. I clerked for a judge on the Second Circuit in New York, which was an interesting moment, made me realize that the legal system was a challenge. I was a litigator in New York. I came out to Silicon Valley in late 90s to start representing startups as the internet was exploding. And that was an incredibly great time to land there. It was so crazy, I stopped sleeping. I was so busy. And got to know a ton of interesting people, went to a lot of board meetings, and in the course of that, ended up meeting the founder of August Capital, a guy named Dave Marquardt, who was on the board of Evite, which was one of my clients as a lawyer. And I was not exactly a wallflower in these board meetings. I said what I thought, whether it was legal or business oriented. It got me fired by another company, but in this instance, this guy, Dave Marquardt, and his colleague, Andrew Anker, who was also on the board of this company, said, Hornik says some interesting things. Maybe he'd be good VC. I spent 4 months talking with them. They talked to so many people. And finally, they said, we can't really think of a reason not to hire you. Lawyers suck at this, and you'll probably fail, but we really like you. And so if you're willing to risk it, then we're happy to have you join us. And my answer was, great. Sounds great. I'm excited. So in June of 2000, I joined August Capital, and I've been a venture capitalist for 23 years now, at August for 20 years. And then after we finished investing, August's 7th fund decided to launch the new fund as Lobby Capital 1 as opposed to August Capital 8. And so we're in the process of finishing up investing Lobby 1 as we speak.
Absolutely. That's such a great story. And let's take that story and cut that into pieces and then discuss that. The first part being at August Capital. So you've seen the complete journey from the early days of August Capital down the way all up until Fund 7. That's a stage that a lot of funds don't get to see, right? So how do you think the fund evolved over time as the AUM grew and more portfolio companies? How did the approach evolve? So love to get an insight into that.
Yeah, for sure. So I joined when we were investing August 3. And the first fund was, I think, $150 million fund. Second fund, about the same size. Third fund, $250 or $300 million fund. Something interesting happened in August 3, which is, I remember, it was a $350 million fund. And my partner, Dave, had been the very first investor in this company, Seagate, which was the leader in disk drive manufacturing. And Seagate was going to go private, and they wanted Dave to participate. And so Dave decided that he should join the board and that we would invest $150 million in this deal out of $350 million fund, which is crazy. If that deal doesn't work, it's going to be a very big hole to dig out of. But Dave was quite confident in the investment. And as you probably know, most venture funds have what are called concentration limits, where you can't invest more of the fund in one deal than 10%. And this was obviously more than 10%. And so we had to go out to our investors, our LPs, and say, hey, we'd like to do this thing. And they said, well, that's kind of crazy, but if you're sure about it. And at the time, one of the big investors in the firm was Bill Gates. And Bill Gates said, look, if the LPs don't want to do it, I'll do the whole investment. And so the LPs said, yes, of course, we'll do it. It turned out to be an amazing investment. We netted more than $1 billion in gain from that particular investment, but it changed something, because suddenly we had this opportunity to invest in this later stage company. It was a very big win. It worked really well. So when we raised August 4, we raised a $250 or $300 million early stage fund, but then we had what we called the Special Opportunities Fund, which at the time was quite rare. And the idea was, if we see some opportunity, some big deal to participate in, et cetera, we can use this additional $300 million instrument, and we'll only get paid on it if we invest it. So it's kind of a thing that's out there. If we use it, we use it. If we don't, we don't. And it turned out we didn't find anything interesting. We had one deal we almost did that would have put the entire $300 million into a single deal, which would have been crazy but amazing and would have worked very, very well. And after that deal, we didn't find anything else. When we raised August 5, we did the same thing, another $250 or $300 million core fund, another $250 million special opportunities fund. That one we actually put to work. And same thing in August 6. And by the time we got to August 7, we said, well, let's combine the funds. There's some complications with having a special opportunities fund, picking what goes in one fund or the other. And we wanted to maintain the same investors in both and in the same ratios in our core fund and our special opportunities fund. And so we just said, why are we doing this? Let's just have a single fund. So we raised a single fund. So August 7 is, I don't know, $400 or $450 million fund, which was a combination of early and late. And so it was the first time that we really expanded the scale of the fund. And when we finished that, we thought, nah, that's not actually what we were seeing. Was everybody getting bigger and bigger and bigger. And bigger's not better in venture. It turns out bigger is worse in venture. Bigger means you have to have more people there. It's hard to, venture does not scale, right? The venture business doesn't scale. It's not like I can hire a bunch of people under me, like in a law firm, and I have them do a bunch of my work and I get to claim their credit for it. And I, cheer them on and they do great work. And then we declare victory and go home. The venture business is a very individualistic business. It's about finding amazing deals and working with amazing founders and winning amazing deals and all of that. And that requires more people, and it requires more qualified and well-trained and thoughtful and lucky and amazing people. And that's very hard. And so if you have $1 billion fund, you need to fund more companies. They need to be bigger. You need to have bigger returns. And so when we decided to not move forward with August 8, we said, okay, what's going to be different here? What do we want to do differently? We decided we'd change the name to Lobby Capital because we had been running this amazing event called the Lobby Conference. It was a community of thousands of incredible entrepreneurs, and we just decided to bring those things together. So we said, okay, we're going to call it Lobby Capital, and we're going to be focused and small. We're just going to do Series A investing. We're going to raise a $225 million fund where any one deal can return a multiple of the fund. And two great deals will return an extraordinary outcome for our investors. And that's what we've done. And we're going to go raise Lobby 2 at the end of this year. And we're going to do the same thing. We are not going to have a $700 million fund because we believe that at its core, the venture business is about great people with focus on amazing companies to get them to fruition. That's been my career now for 20 plus years. And I think that's the venture business.
Absolutely. Thank you for sharing that amazing story. And I've some questions, follow-up questions to that. So
Yeah, for sure.
yeah. So the first one being, when you were like having these two split funds, was it just a split internally that the team has decided that, okay, we have a total of 500 million of assets to manage, then we are going to split that into 250, or was it decided when you were going and pitching LPs that, okay, there are two funds that we are raising for? One is the core fund, and there is another opportunity fund, and then the LPs decide how much they want to put in which fund. So how did that work?
So they were absolutely two funds, and very specifically two funds. We had a core early stage fund.
Yeah.
So if you look at the early days of August to today, the early days of Lobby Capital, we've done the same thing for 23 years. $250-ish million core Series A fund that we put to work, and when it delivers returns, get great outcomes for our LPs. August 7, we were one of the earliest investors in GitLab. It was an amazing outcome, and it has delivered more than the entire initial fund, which means that we have dozens of more companies that can deliver great returns for our investors. That's the goal here, is invest in the next great GitLab, right? I was one of the earliest investors in Bill.com, the earliest investor in Splunk, the earliest investor in Fastly. Each one of those delivered a multiple of the fund, and that's the thing that's amazing. And so we had a core fund, which was, call it $250 million, and then we had this special opportunities fund, which, if we invested it, we'd get paid fees on, and if we didn't, we'd return the commitment to our LPs. But every LP had to commit to both funds in the same ratio, because what we didn't want to do was have this challenge where some LP had a lot of money in the special opportunities fund, and we put something in the core fund, and they're like, it should have been a special opportunities investment, and vice versa, right? So if every investor had the same ownership in both funds, they were indifferent to how we invested that capital.
Right, absolutely. Yeah, that's a very sensible approach. And talking about AUMs, right, there is a debate around how much of funds should you be ideally managing to be able to return the fund, return a multiple on the fund, because there have been researches which say that, okay, the emerging managers managing 10, 20, $30 million funds are like returning the fund much better than funds managing like hundreds of millions of dollars, right? So what's your opinion on that? And how do you make that play out at Lobby Capital now?
Yeah, I think it just depends on what your strategy is, what your view is. I do think managing hundreds of millions of dollars as an individual investor is a very challenging thing. And you can't do it as an early stage investor, right? I can't invest in 50 Series A deals. That's just not, I won't even know who they are when they call, all right? The seed investment strategy is a different strategy. You're putting a smaller amount of money into a bunch of things. You're hoping they raise Series A's. And then the Series A investor like me sits on the board and helps to manage and nurture that company. And so that is about picking a bunch of early bets and hoping that they get to that next level. So you can do 20, 30 investments and be helpful. You're not sitting on boards. You're not doing those things, right? The challenge there isn't that you won't get great multiples. You can get great multiples. The challenge is that if you're an institution that's trying to invest, it's hard to invest enough money in these small funds that even if they have a multiple, you get to big enough outcomes to move the dial for you, right? So there are all these dynamics where you have big investors and small investors. If you're a smaller investor, you're thrilled to turn $1 million into 3. If you're a big investor, turning $1 million into 3 has very little impact on your capacity to drive returns across your portfolio, because you have exactly the same problem. You can't do 1,000 of those, right? If you want to put $1 billion to work, you can't do $1,000 million investments. That's just not tenable. So So we came to the conclusion that the sweet spot for us, and we think that should be the sweet spot for LPs, is we raised, call it $75 million-ish per partner. We're putting that money to work over a 2.5, 3-year period of time. We're going to, in every deal we invest in, we're going to be big owners. Our ownership target is 20% of the company. In our current fund, we on average own 19% of the companies we've invested in going in, which means that we can concentrate our focus on those companies, give them lots of time, give them lots of attention, because if any one of them has a great outcome, it's going to deliver fantastic returns for all of our investors in the fund. Now, the challenge is if you have many, many billions of dollars that you're trying to put to work, you can't give me $100 million in a $300 million fund. And so, that is the tension. But for us, we're trying to deliver great returns for our very small, very focused, amazing group of investors. And they appreciate that.
Yeah, absolutely. So from what I understand, that Lobby Capital is kind of a rebirth of August Capital in a new shape and form. Is that correct?
Yeah, it's really a rebranding. Yeah. It's a tighter focus. Mm-hmm. It's a slightly different group of people. My partner, Eric Karlborg, and I were the general partners in August 7. We're founding general partners of Lobby 1. But we brought in this incredible partner, Buddy Arnheim. We brought in these 5 great venture partners to participate with us. And so it's really just the evolution of August Capital with a new name.
Yeah, absolutely. And something I've heard your partner say when in the video, that when you're launching Lobby Capital, is that venture capital is the best job in the world, right? And you agree to that, right? So yes. Why do you say that? What's your reasoning behind that?
Well, think about it. It's sort of an astonishing opportunity. It could also be the worst job in the world if you're a particular person. But if you are someone who's curious and likes people and is excited by innovation, what could possibly be more amazing? In any given year, 1,000 people email me and say, I'm working on something amazing, and I would like you to participate. And I look at those 1,000 ideas and I say, of those 1,000, okay, this 100 seem like they fit my criteria. There may be other great opportunities, but they may be in med tech or bio, and we don't do that. They may be very early stage, and we don't do that, or late stage. But of those 1,000, 100 of them are sufficiently exciting and interesting that I say, great, spend an hour with me and tell me what you're doing. I then spend an hour of my time with people who are absolutely committed to making some new technology or approach work that will transform the world. And of those 100, 10 of them capture my excitement, and I say, I got to really dig in here. I get to know those founders well. I get to understand the markets they're chasing and the technology they're building. And of those 10, I'll probably give 2 of them a term sheet. The 2 that I give a term sheet are just amazing people working on things that are completely transformative. And then I get to sit on their boards and I get to help them build these big, interesting businesses. And every so often, one of those businesses ends up going from 5 people to 50 to 500. It goes from no revenue to $1 billion in revenue. It goes from a teeny private company to a public company. I mean, that ever happens is so astonishing and exciting and exhilarating that it really is just the most amazing job on the planet.
Absolutely. Loved it. And you talked about the criteria that you use, from cutting down the 1,000 pitches that you're receiving to 100 and then evaluating them. So what's your criteria basically while evaluating these? What are the key things that you're looking for while making an investment? Yeah.
Well, first and foremost, I'm looking for amazing people who are trying to change the planet in some positive and important way. Now, interestingly, that doesn't that could mean a lot of things, right? I funded the very first, small business SaaS business, which was an online payroll company called PayCycle. But if you had talked to that founder about the impact that PayCycle could have on the lives of small business owners, it was infinite. His parents had been small business owners. They had run a payroll business, and he understood how challenging and important this was for small business owners. That was exciting. I met these incredible founders who had an idea to build a search engine for data. This was in a time when there was no talk of big data or machine data. They just said, look, there's so many log files, and when something breaks, wouldn't it be great if you could just search for what went wrong as opposed to having to read a bunch of files? And those founders ended up building Splunk, which became this transformative engine that allowed companies to scale, allows them to be more secure, to be more compliant, all these things. So I'm looking for inspiring founders who are driven to build something important and exciting. I'm looking for them to solve a real and interesting problem, something that has real product market fit. I'm looking for those things to be big and exciting, that if it works, it should be, a giant, exciting business. And I'm looking for the capacity to invest enough money in the business that it will make real progress over the time that that capital is being put to use. And if all of those things are true, then I'm pretty excited to fund your business.
Absolutely. I love that. And since you have, I believe 3 partners or 4, what's the number there?
Well, there are 3 of us who are general partners, and then 5 venture partners, all conversations about companies involve the 8 of us.
Okay, that's amazing. So what's the procedure for getting to a final decision? Do you have a voting mechanism, or is it based on individual conviction? How does that work?
We don't have a vote. I have seen over more than 20 years that the process of getting to consensus gives you a huge amount of information. It also gives you, the person who's advocating that business, a sense of all of the challenges and opportunities of that business. And so if someone is an advocate for a business and they can answer the challenging questions of the partners about the market and the business and the founders, and they can describe a future in which that business could be big and transformative, they don't need unanimity. They only need a broad sense from the partnership that this is an opportunity that makes sense. Then we get to the question of what's a good term sheet and what's a reasonable investment and all of those things. But the first question, which is fundamentally, would we like to be owners of of a piece of this business, is a collective conversation that does not require all of us to agree, simply requires a group of us to think that there's a big and exciting opportunity.
Yeah, absolutely. And one more aspect I want to talk about is the exit potential, right? So is that something that you index on while you're evaluating the deal, that how many years will it take for this company for a potential exit, and what are the potential pathways for it? So are you thinking about those things right at time while making the investment, or is that something that you drive the company forward after investing? Yeah.
I don't think that we have any. I do think if we thought it would take an infinite period of time to solve a problem, that would not be a good use of venture capital, right? So there are technical problems that would require too much time or too much money to get to commercial outcomes. And so we're unlikely to invest in those. Everything we invest in, we believe at the time we make the investment has the capacity to be a standalone business that can exist on the public markets. If we do not meet that criteria, we won't invest in your business. If you don't have that capacity to get to $100 million in revenue while growing 50% year over year, and the capacity then to the next year do $150 million in revenue, then you're not likely a good candidate for venture capital. Now, the mere fact that we can see a universe in which those things are true does not turn out to be true in most instances, right? Most startups have a very hard time getting to $100 million in revenue, growing past that. But those businesses that do, those businesses that get to that point are astonishing and giant opportunities. So for example, we funded Turo, Turo, the car sharing company, when they had a dozen cars on the platform. And we said, if you could get to the point where thousands of cars were being shared and people were renting thousands of cars on this platform, then the economics of this could work well. What does it take to get from here, a dozen cars, to thousands of cars? And how much capital, and what's the leadership, et cetera? And we invested in that company. We didn't have a fixed time frame. We just said, this has a huge opportunity to transform the car rental space at scale. Well, it turns out today, the company is on file to go public. It has been now for more than a year as it's waiting for the public markets to return. But it means that they're filing public filings. You can see how the business is doing. There are more than 100,000 cars on the platform. It is making hundreds of millions of dollars. And just the other day, I rented a car on Turo. This amazing young man brought the Tesla to me, said, here are the keys. I started chatting with him, said, we were the earliest investors in this company. And he said, oh, that's amazing. He said, I have 4 cars that are on Turo. I'm buying 2 more to put on Turo. It is my job. My job is to be a mini rental car agency within Manhattan. How amazing is that? That's an amazing win. It means that this thing had really worked. So we're not looking for a specific time frame. But we are looking for opportunities that at scale are gigantic financial opportunities that are truly transformative.
Absolutely. And you've described Lobby Capital as not just venture capital, but human capital, right? So let's talk about that human aspect. So how do you add value to the companies that you've invested in? What's your contribution to the success that your portfolio companies are seeing?
Well, I always say that first and foremost, I make jokes at your board meetings, and I feel like that's value add right there. We are involved in all sorts of ways with our companies. We get involved early. The reason I like early stage investing is because I build real relationships with these amazing founders. And I help them in all sorts of ways to think through the challenges of the business, to introduce them to amazing people who can help them be successful, to help them raise capital, to help them recruit astonishing people into the business. To help them get publicity, to help them, so there are just a huge range of ways in which I'm involved in the companies. I'd say all of the partners at Lobby Capital tend to be the person on the board the founder calls first. Says, okay, I have a real challenge. How do I think about this? Something happened, and can you help me think through it? Or, hey, I have a real opportunity or some exciting thing, and I want to tell you about it first. And it's because we truly become part of the fabric of the company. I'll tell you one thing that people don't talk about is how hard entrepreneurship is. Like being an entrepreneur, I talk about the venture job being the greatest job on the planet. Entrepreneurs think their job is the greatest job on the planet, but it is also the hardest, loneliest job on the planet. To be the CEO of this little company that is always perilously close to going out of business, and sometimes, in fact, does go out of business, is really taxing. It's hard. It's intellectually challenging. It's physically challenging because you're working long, hard hours. And it is psychologically extraordinarily challenging. And one of the roles that each of the partners at Lobby Capital plays is confidant, is cheerleader, is supporter, is, is sounding board for these entrepreneurs who really have very few resources to go to, who are just there to help them be successful. And so when I say that this is a people business, I mean it. These people are my friends. They're my colleagues. They are people I care deeply about, and I'll do anything I can to help them be successful, both in their company, but as humans, as parents, as spouses. Like this matters to me. I think that this is a human business.
Absolutely. I totally agree. And one more aspect of this, like comparing the VC job to the founder job, is that the VCs always hedge their bets, right? They have like a complete portfolio construction strategy that, okay, we have our eggs in different baskets. And then the founder, they are like all in on one thing, right? It's like, this has to work. That's it. That's
yeah, no, that's extraordinary.
Yeah.
It's extraordinary that someone can make that bet,
Yeah.
is willing to make that bet. And it also adds to the stress.
Yeah, totally. And like, let me ask you this. So you've had a like great and long venture career up until now, still continuing. So what's been one mistake or maybe the biggest mistake that you wish you had avoided that you made in this investing career?
Look, every good venture investor can tell you about the deal they didn't do, right? Bad venture investors, and I use that term very loosely, very gently. I think venture is hard. Don't get to see these great opportunities, and therefore they haven't managed to turn them down or not do those deals. I have managed to not invest in some fantastic companies. I talked about how it's important to have a business that scales. And when I spent time with Travis talking about Uber's Series A, they only had Uber Black. And we spoke as a partnership and said, well, is really Uber Black a big enough business? Now it turns out, no, Uber Black is not a big enough business, but Uber X is. And that turned out to be an amazing business. But we didn't continue forward with the conversation. Or, Twitter in the early days having conversations, and others. The one I regret the most, to tell you the truth, is that I was remain very good friends with Reid Hoffman. I think he is both a phenomenal human and an extraordinary business leader. And I had the opportunity to lead the Series B round of LinkedIn. And for lots of very stupid reasons, I did not do that. And it's the one I really regret the most, because I look at that and say, Reid is someone I respect. He brought in incredible leadership. The company built something that was unambiguously valuable. No one, says, oh gosh, LinkedIn, I wish they were more moral and decent. Like there are just a lot of things. So failing to fund LinkedIn is a shame. I wish I'd had the opportunity to work with Reid on that. But that's how the venture business goes.
Yeah, I totally agree. And talking about LinkedIn, like it's a great platform. People always say that okay, LinkedIn is boring now; it's not going to work anymore. But I would say that of all the social networks out there, LinkedIn probably has the strongest positioning. It's the hardest to beat among all. Like call it Twitter, call it Instagram, everything else. Like it's even Instagram faced tough competition when TikTok came in, right? But it's hard to replace LinkedIn because there are like strong network effects built in right there, and it's hard.
Well, by the way, you're killing me, because this is what Reid said when he was raising money. He's like, all I have to do is get all these profiles and I'll get the scale, and then it's untouchable. Like, oh, I agree with you.
Sorry about that. All right, we'll switch into another question now, and this will be our last question before we move into the rapid fire round. And this one is about, what's your biggest learning been investing over the years, or something that you wish you had learned earlier that could have helped you in investing better, maybe?
I mean, I'm constantly relearning this, but people. Invest in amazing people. Do not invest in, if you have questions about the people, don't make that investment. If you think the people are amazing, but you have questions about the market or other things, that's okay. You might want to just invest in the amazing people. There just have been some astonishing people who I was excited to back, and ultimately didn't for various and sundry reasons. Reed's, of course, a good example, etc. People. Like there's nothing that will replace it. It's why there's already this conversation. Oh, will artificial intelligence be able to replace venture capitalists? Well, artificial intelligence, first of all, is based on a lot of data, and early stage venture, there's not a lot of data. But secondly, early stage venture is about the people. And when you show me an AI that can tell me the difference between an amazing entrepreneur like a Rene Lacerte and a less amazing entrepreneur, sure, you can tell me today that Rene Lacerte, the founder of Bill.com and PayCycle before it, is an astonishing entrepreneur. But when I funded Rene, we were both in our 30s. It was his first company. I loved Rene. I thought he was an astonishing guy. But no AI would have said, yep, here it is. This is your next multi-billion-dollar earth-shattering founder. And so it's all about the people.
Yes, totally. And that's a great note to end this on. And now let's do the rapid fire round, wherein I'll ask you 5 quick questions about the fund, and you have to give 5 quick answers. Sounds good?
All right, I'm ready.
All right. So the first one goes, what are the sectors and regions you invest in?
We're really software investors. We invest in enterprise, SaaS, infrastructure, consumer, marketplaces. If software is the heart of what you're building, then that's what we're interested in.
Great. And what's the typical stage of investment?
Late seed and largely Series A. So if you have made some progress on product market fit and $3 million will help you to demonstrate that, or you've got some great product market fit and you're looking to raise $7 or $10 million, and we're going to go on your board and we're going to help you build a big business, that's the ideal deal for us.
Absolutely. And what's the typical check size you put in?
Well, as I described it, probably $3 to $10 million is our initial check. It's a pretty broad range, but somewhere in there.
Absolutely. And in case there's a direct way to pitch you, then what's that?
Yeah, you can always email me. I read every email I get, Hornik@lobby.vc. So feel free to email me, Hornik@lobby.vc.
All right. And last one, where can our listeners follow you?
Oh, I'm now at David Honik on Threads, so you can get me there. That's good.
We're recording just in time to get this one in, right?
Yeah. Get it in under the wire.
Absolutely.
And I'm posting stuff on Facebook and LinkedIn. I'm always at David Honik, and I'm thinking about relaunching my podcast, which is called VentureCast. I had the pleasure of being the very first venture capital podcaster on VentureCast. Was very first venture capital blogger at VentureBlog, and so it's probably time to refocus those things.
Absolutely. I'll totally agree. And we'll talk more about it after recording. But yeah, you should definitely do that. Why I say that is for multiple reasons. And one of them being that you have amazing energy to yourself, right? I feel the energy that you're propagating through this video call that we're on right now. And I think more people should feel it through that podcast that you can do. Thanks so much for coming on, David. It was a pleasure hosting you, and happy investing.
Yeah, thanks so much. Really enjoyed it.
Pleasure.